So in this section, what will you learn? You will learn, number one, what is leverage? Number two, how leverage affects your trading. And finally, what are the different types of Forex lot sizes? So let's get started. What is leverage? How leverage affects your trading? And what are the different types of Forex lot sizes? So let's begin. So what is leverage? So intuitively, I know you know what leverage means, but let's explain this when it comes to the Forex markets. So leverage is, in essence, right, the ability to trade a larger amount of money relative to your account size. And leverage is a double-edged sword, and I'll explain more. So let me give you an example. Let's say you have $1,000 in your trading account and you buy $10,000 worth of Euro USD. This means you borrow the extra $9,000 to trade. And if you want to measure the leverage, this is a leverage of 1 to 10. Why is this a 1 to 10? You take the $10,000 that is worth of the Euro USD divided by the initial capital that you have in your account, and you get 10. So this is a leverage of 1 to 10. Now, the question is, what if Euro USD goes up? How does leverage impact your trading? So recall you have a $1,000 account and you buy $10,000 worth of Euro USD. Your $10,000 is now worth $11,000. Why $11,000? Very simple. You just take $10,000 and you multiply by 1.1 because you actually earn 10% because this currency pair went up 10%. So 10,000 minus, or rather multiply by 1.1 is equals to $11,000. Or if you look at it another way, 10% of 10,000 is 1,000. 1,000 plus 10,000 equals to 11,000. That's another way to do it. Next, you return the $9,000 that you owe. What you're left with is the $2,000. And remember, the $2,000, right, what you had initially at the start was $1,000. So in other words, your profit is $1,000. Right, $2,000 minus your original capital that you started with, you made a profit of $1,000 on this particular trade. And I know, man, Rainer, this looks easy. Man, I'm going to be the next market whiz millionaire trader. Well, not so fast, my young Padawan, because what if Euro USD goes down 10%? And how would this change? So now, recall you have a $1,000 account and you buy $10,000 worth of Euro USD. Your $10,000 is now worth 9,000. Why is that? Because 10,000, okay, if you lose 10% of your capital, now it's worth $9,000. You return the $9,000 that you owe. You're left with $0. In fact, I have no idea why there's 4 zeros here, but 0 is 0 is 0, okay? And your original capital is $1,000. So this means your loss is $1,000 because you started off with $1,000 and you're left with 0, 0, 0, 0. So in other words, you lost $1,000. So the key thing to point out is that leverage can amplify your gains and losses. So if you think about this, if without leverage, this, right, would have been a 10% loss to you. But because you used leverage, you lost 100% instead of 10%. So likewise, when you had a gain earlier, when you had a profit, when the market went up 10%, if you didn't use leverage, there will be a profit of 10% for you. But because you used a 1 to 10 leverage, it is amplified 10 times. You made a profit of 100%. So in this case, it's $1,000. But in percentage term, it's 100%. Okay, so this is pretty much the key thing that I want to point across is that leverage, it can amplify your gains and losses. And for this case, in this example, you lost 100% of your capital because you used a 1 to 10 leverage. If you didn't use leverage at all, there would be a 10% loss of your capital. Moving on, right, I want to talk about Forex lot sizes. So what are the different types of Forex lot size out there? Number one, we have a standard lot, which is equivalent to 100,000 units. So when you key in 100,000 units to buy in your Forex broker, you are essentially buying one standard lot. Then below that, we have a mini lot, which is 10,000 units, followed by micro lot, which is 1,000 units. And smaller than micro lot, we even have nano lot, which is 100 units. So one thing to point out is that you can trade fractional lot sizes. It doesn't mean that you only can trade one standard lot, one mini lot, or 5 standard lots. You can, break it up and trade something like 1.3 standard lot. You can trade 2.5 mini lots, 3.7 mini lots, 2.6 standard lot, 1.5 micro lots. It is all possible, right, when trading the Forex market. So in a way, you can, better manage your risk, as I will explain how that will work in the later section. So let's do a quick recap. Number one, leverage is the ability, right, to trade a larger amount of money relative to your account size. And yes, you have seen, right, leverage is a double-edged sword. It can amplify your gains or losses. And finally, we talk about, the different types of lot sizes in the Forex market: standard lot, micro lot, mini lot, and nano lots.